Welcome to the Value Investor TV podcast. Dun-dun-dun. This is the podcast that helps you grow wealth and become financially independent. My name is Veko, and my partner,
Hari.
Dr. Radhakrishnan.
Yep.
How are you, doctor?
I'm doing well. How are you?
Good, good. It's good to be in Houston.
Yeah. Yeah. It's
Hot and humid.
muggy. It's July.
It is July.
Can't expect much else.
All right, in this episode, we're going to be talking about Allison Transmission.
Yeah.
Actually, before we do, let's do a quick disclaimer.
Yeah. So this is the Value Investor TV podcast. We are a podcast that helps educate you and entertain you about the principles of value investing. We are not a financial advisor. We don't know your specific financial situation, so please consult one financial advisor or tax advisor before making any decisions.
Awesome. Great. So, Allison Transmission is the company of the day. Tell us, why are we talking about this company first off?
Yeah, so the last couple episodes, we actually talked about share cannibals.
Mm-hmm.
And share cannibals are we had predicted or produced a list of companies that cannibalize their stock price and or cannibalize their share count. And one of the things that jumped out about them was on that list, they had a very high rate of earnings growth for the last 5 years.
Per share earnings?
Per share earnings growth. And so we wanted to see why that was, right? And so I knew nothing about this company. I've heard of them, but not really paid attention to anything. I don't know a whole lot about transmission. And we're talking about car and, vehicle transmissions. So we wanted to see if this was a potential, undervalued gem, because they were heavy emphasis on their share buyback. And so that's why we're here.
Awesome. Okay. So as usual, when we pick a company, we go through a checklist, and this episode is not an exception. So we are going to be going over Allison Transmission with our checklist. And if you don't have the checklist with you, please do send us an email at info@valueinvestor.org, info@valueinvestor.org for a copy of this checklist, or tweet to us. Our Twitter handle is valueinvestortv. Okay, so let's go down the list, shall we, Hari?
Yeah.
So the first question off the bat is, what does the company do? You should be able to answer this question in less than 2 sentences.
Yep.
So tell us what Allison Transmission, what do they do? What are they up to?
So Allison Transmission has for the last 105 years designed and manufactured commercial and defense fully automatic transmissions.
Okay.
So they were part of GM from 1929 when they were purchased by GM to 2007, and then they were a standalone business. And about 75 to 80% of their revenue comes from North America, so they have a big presence in that space, and they are the largest manufacturer of medium and heavy-duty commercial vehicles and medium commercial transmissions, medium and heavy tactical transmissions for U.S. defense vehicles. So they operate in a space where they are not the final supplier. They don't sell their end product to the customer. They sell it to companies who then put it into a vehicle, such as Ford or GM, and they also sell to companies like Daimler, which makes Mercedes, as well as companies who makes vehicles for the military. And they actually kind of break down their business into on-highway and off-highway business. So on-highway is, the vehicles that you would think about, that, trucks, heavy-duty trucks, commercial trucks, and buses. So school buses are a big driver of their... and they actually do also play in the electric vehicle bus market. In addition, they also have what's called off-highway. So off-highway vehicles and equipment are things that you would use in like mining equipment, oil and gas,
interesting,
that kind of stuff. So they're, and for those of you who don't know, because I'm not a car guy, There are different types of transmission. There is manual transmission, there is automated manual transmission, and then there is fully automated automatic transmission. So those three types, of which manual and automated manual are, use a clutch, a disconnected clutch system. And what they say is, while you are shifting the clutch, and this is their opinion, there's power loss in the gear shift. So when you're gearing up, and they're saying that this doesn't apply to your car or light trucks, that kind of stuff. There's power loss as you do this. And so when you have a vehicle that is doing long haul trucking, you shift up and then you get into a steady state. And that steady state, you don't really shift gears. So that's not what they're targeting. They are targeting vehicles that do a lot of stop and go type, start and stop activities. So that could be, they say that's where manual transmissions are less effective, and it reduces the performance because you have to frequently reconnect the clutch. So fully automatic, the intermediate step, which was not manual transmission but automated manual, it re-engages the clutch for you, but it still loses the connection. So you lose some of that power, according to them. So they say that they target these companies, these vehicles that will be working in like urban environments where there's a lot of start and stop, because they have that smooth gear shift. They don't have the disconnected clutch. And then there are these things called dual clutch transmissions, which are manual transmissions, or automated manual transmission, which has a facilitated gearbox shift. So that's where you found in buses. And so by having their fully automatic transmission, they believe it reduces fuel consumption.
Could I say something right there?
Yeah.
I think this is just a kind of high level comment about value investing generally. You said you don't know much about transmission. I think one of the benefit of, just at a high level, not specific to this company, just one of the benefit of becoming a good value investor is learning about new things.
Yeah.
Like this.
Yeah.
You didn't know about dual clutch transmission. Now you do. Maybe a little bit, but
yeah,
still.
And you'd be surprised where all of this knowledge will... I've learned so many things for companies that I thought I would never invest in, and then I actually end up using it in my day-to-day life for some reason or another. Sure. So, yeah, that's the great thing about value investing. It's like basically, learning how the world works.
Yeah, so. That's great. Okay.
So yeah, they actually talk about, interestingly, and I never really thought about this. Most people think about fuel efficiency as it relates to miles per gallon, and their argument is that, but if I can load up more in my truck, then I have to make fewer, I have to drive less. And so if I can be more efficient by actually hauling more stuff, that's far better than actually having the highest miles per gallon.
That's interesting.
So one way of thinking about it. So, that's kind of what they do, and what their business is. Yeah,
that sounds good. So a lot of heavy duty sort of equipments. Transmissions very specific and heavy in North America. They also do commercial and defense, sort of at a high level of what they do. Yeah. Okay, let's move on to the next point, which is what is their competitive advantage? How are they different than other competition in the space? Could you classify their competitive advantage into brand, network effects, switching costs, lower cost, intangible assets?
Yeah, so there's a couple things that I think are important here. So this is a highly technical space that they operate in. They have patents, including patents that GM gave to the company with a royalty-free perpetual license, that worldwide operating license. So there's some technology here. When we look at that falls under intangible assets. There's also software that they use, which some of which is covered under patents, and some of it is covered under their technical knowledge and know-how. And I think the other thing is they're the biggest player in the space, so they're a big brand moat. So I think they have 50% of their revenue comes from 5 customers. So when you're talking about this space, you don't have a lot of options to deal with, right? There's these guys, there's a few others, and they cite some other companies that they list, and we'll talk about that when I get there. But I feel like there's some heavy switching costs for switching from their type of transmission to something else.
Yeah.
So that has some impact on, sticking with them.
For sure.
Their brand is well known. So, if you're building a new vehicle, you'd probably go with the Allison Transmission if you need it for their vehicle. So I think those are the two biggest ones. I can't speak to the low cost aspect of it. I don't know that they're the low cost provider. They don't mention it in any way. So I wouldn't classify that. But I will say that, one of the things that's interesting about this moat is that even though they have a moat, that doesn't mean that it protects their revenues. They're heavily dependent on the economy. When the economy is going well, people are going to be ordering trucks. And when they're ordering trucks, they need transmissions. And when the economy is doing poorly, that goes away. And they have no way of buffering against that. Now, that basically makes them a cyclical business, right?
Yeah, so let's just recap on point number 2 here. Question number 2, their competitive advantage, switching costs is obvious. It's a pretty obvious one, and then intangible assets are the patents and the technology behind the products.
Yep.
So moving on to the third bullet point, how durable is their competitive advantage? You sort of touched on it a little bit, but if we could dig a little bit deeper into it. Durability of their competitive advantage, and what are the risks associated with the competitive advantage that they have now?
Yeah, so I think that's where this stuff kind of gets interesting, right? In the future, are we going to have gas-powered trucks, heavy trucks and things like that? I don't think they're going to go away, right? So I think there's going to be some competition related to electric vehicles, and they do have some transmissions that work in that space. And they mention, that some of the companies that they compete against are actually companies like Caterpillar who make their own transmission. So they're not going to break that into that space because Caterpillar does that already. So when they sign agreements with companies, they're 3 to 5 year contracts. And so that means that there's some buffer built into their advantage, that we would have some advance notice that they're going to move away from the contract or they're going to lose out some business. So I think there is a strong moat. I think the problem is that because they operate in a cyclical business, it makes it a less powerful moat overall, just because it's going to have lots of ups and downs. And during 2008. There was fairly, they took a big hit, and then, things have picked up. But even when times are good, it's not necessarily that they've had a stellar, last 5 years, right? They've had a lot of ups and downs.
Yeah.
So I think there's some things to be said there, and as far as like the moat goes, also 80% of their revenues are coming from North America. So it's hard to tell if they're going to be able to compete in Europe and the Middle East and Africa. And they have only about 6% of their business comes from the defense market. So I don't think that's going to be
quite minimal.
Yeah, it's not going to be affected. But service, parts, and support accounts for 25% of their revenue. So they're also supporting their systems that have already been sold. So, and about half of their business actually comes from the on-highway North America market. So there's kind of helps you understand where their money comes from, and all that. So
breakdown.
I do think they have a competitive advantage. I just, with that kind of operating history, there is a potential for disruption as cars actually change to electric vehicles and companies develop their own powertrains instead of using the transmission.
So those are some of the risks to the current competitive advantage, you would say.
Correct.
Okay, let's move on to the next question, which is, what is companies' long-term prospects and runway for growth? You mentioned a little bit about kind of the long-term prospects for the car industry, transmission industry, namely that the industry is changing to electric.
Yeah.
So what are your thoughts about that?
So I am not sure how much, and this is where my knowledge of the industry is just not up to speed, right? I'll readily admit this is outside of my circle of competence.
Mm-hmm.
So, I mean, and part of expanding your circle of competence is there something valuable in this business? And then let me go learn about the industry and that stuff. And so when I get to my conclusion, I'll tell you, I haven't done more research into this industry, partly because we'll look on Allison and see that cyclical businesses are not my forte. That I find better places to put my money than here. But that being said, I think there is a long-term prospect for growth here, but it's just going to be bumpy, because of
cyclical nature
of the industry.
Then just to highlight on that point, cyclical nature in that it's a cyclical in that it syncs with the economy up and down, going up and down.
Correct.
Yeah. Okay. Let's move on to the next question, which is, does the company require a lot of capital in reinvestment to maintain its business? Can it grow without any further investments?
So that's a really interesting question, because I was expecting a business like this to be a heavy asset play and things like that.
Yeah.
And they're really not. Their property, plant, and equipment is pretty small relative to their overall balance sheet. They actually have quite a bit of goodwill on their balance sheet, and that's from purchases that they've made over the last few years. Their total asset base, I think, was $4 billion, and but the net property, plant, and equipment was only like $400 million.
Oh wow!
So when you look at it, almost all of their assets are actually intellectual property, right? And that's not on the balance sheet, right? They're more like a software company than I expected, right? So
that's really interesting.
This is why we learn about companies, right? Is that we expect they have a big manufacturing plant, they have a big, heavy, they're building these giant transmissions, right? But they're still pretty asset light relative to all of the things that we are talking about here.
Can you reiterate some of the numbers there again? 400 million.
So they have 400 million in net property, plant, and equipment. Their working capital is a lot larger. I want to say it's like 500 million also. But this company almost generates on their tangible capital returns about 75% return.
Wow.
So they make about $600 million a year. And I want to say that they have 800 to 900 on tangible capital.
Assets. Yeah.
So a lot of it is, is goodwill. And, so it's I should say that is current assets minus current liabilities. So it's net working capital
that's including cash.
Yeah. So, they have a lot of current assets that are inventory and things like that, which make up for it. But net, their working capital, which is how we do the Joel Greenblatt return on capital formula, it's close to 75%.
Wow.
So it's in some ways a very light business relative to what I expected it would be.
Yeah.
And I think that's largely because they've operated for so long. They have
interesting.
They've built up a lot of intellectual property and things like that. Like if you and I were going in to try and compete with them and build transmissions, we're not going to do it for $800 million, right? And so they're in some ways it's going to be really hard to beat them at their own game.
Yeah, for sure. Okay, let's move on to the next question. So previous question was very interesting, that it's more like is not as capital intensive as I expected, as you expected.
Yep.
So moving on to the next question, which is, does the company have favorable relationships with the following: customers, suppliers, employees, regulators, or community?
Yeah, so there were no red flags. Their customer base is like I said before, like companies like Ford and Daimler, and that means that they have to appease them, and their top 5 customers account for 50% of their revenue. So I want to say Daimler was their largest, and then I don't know how to pronounce this. Paccar, Paccar, was their second, and Daimler was like 18%. And Daimler has a lot of heavy trucking equipment and stuff like that, and so that means that many of their, they have to maintain good relationships. Now, that being said, I think it's hard for companies to switch to different transmissions. It would be expensive, and as we've seen, the car industry is pretty low margin, so switching is not going to happen without a really good reason, right? And I think that means that also Allison can't just jack up the price, but they want to maintain good relationships with their customers. So I don't see any problems there. Suppliers, the same thing. I mean, they're basically getting commodity, aluminum, steel, etc. Materials are not a problem, and they can go elsewhere if anything comes up. Their employees are unionized, and they've said in 30 years they haven't had a single strike or problem with union labor.
And they're based in Indiana.
Correct. Indiana, and have been there their entire time. So for 100 years.
So I imagine pretty local, very loyal kind of community support.
Correct. Yeah. And their last collective bargaining agreement, or their current collective bargaining agreement, goes through 2023. So they still have 4 years of under that. So I don't expect any disruption in the
labor participation.
In the labor, yeah.
And regulators, anything around there?
No, I didn't see anything. They didn't mention it. And I didn't see anything there. Daimler was 18%, Paccar was 10%, and those three others accounted for collectively accounted for 49% of their business. So there is a heavy concentration because they're not selling direct to consumers.
Yeah, makes sense. Okay. I think we're going to stop there for this episode, and then we'll pick up financial management valuation in the next episode.
Yep.
Do you have any additional comments you want to make before we close this one out?
No, I think, just about the Apple Podcast, if you want to help us out. Yeah,
please give us 5-star rating on Apple Podcasts. I think that would help us out quite a bit. We are trying to get ourselves out there, help people out. So any sort of outreach effort, any sort of effort to get ourselves out there would be helpful. And one of the ways we can do that is by getting your input on Apple Podcast rating system. Okay, thank you guys for joining us. We'll see you on the next episode.
Thanks.